is the Telecommunications ETF. This one is probably the best of the bunch. That's our resistance line, but look here. This is the support line we've got. In fact, it goes all the way back to right there. So this is a pretty good, see right here was resistance, resistance, and then resistance, but eventually we broke out right there. So this one's at a pretty good support line, but again, if you want to extrapolate this to an overall market view, is telecommunications, stuff that has high yield but low earnings growth but consistent earnings growth, is that something that we like to see that money could come into? And that's negative. We don't want to see the money coming into defensive sectors. So, but this one, telecoms, what I like is AMT. I like this. We got support and resistance, a little breakout on Friday. Stochastic's about to cross over, and on balance volume has been trending up and kind of sideways this past move, but that's what I like to see when we get a little retracement, as we did, you know, right here. Well, right here in this consolidation, we don't want to see lots of distribution. Distribution with the on-balance volume looks like this. When this orange line kind of goes down, that's distribution. So in a consolidation phase, you don't want to see distribution, and it's not being distributed because by definition, if it was being distributed, on-balance volume would be going down instead of just moving sideways. So this AMT, it's part of the telecommunications sector. Let me you can see it right here, telecommunications. I've got it faded out a little bit to focus more on the price action, but you can see that's a good one. AMT also. Windstream. This is a good one. I like Windstream. I like it a lot right here at $12.70. Maybe if you get $12.50, it's certainly a buy. But Windstream, I like it because we just got this stochastics crossover. Right there, you can see the yellow line crossed over the white line right there, and we're also getting this MACD. That's the moving average convergence divergence line. That's just about to start coming up and cross over into blue territory on the histogram here, and you can see what happens anytime we get a crossover on the MACD like we did right here. Okay, that corresponds with a good buying opportunity because you caught this kind of a move. Same thing right here even. This one wasn't a great one, but I mean, crossed over right there, and you did catch pretty good upside. So Windstream and AMT, American Tower, are ones that I'm looking at in the telecommunications sector because that one looks like it's working. Next is the spiders, the SPY, and what do we have? Resistance. Okay, do you really want to be a buyer right there? I do not, because it didn't work here, didn't work here, didn't work here, certainly didn't work here. I have to assume it's not going to work there. But if we get something like this, and there, the bounce, I'll buy this move right here. But then, if we do get that, assuming we get rejected tomorrow morning, which it looks like we're going to, even then, what we've got to worry about is this 200-day moving average that held last time, right here. If we get a move back down from here, back down to the actual support line right at about 127 or so, what do we have? We have a breakdown of the 200-day moving average. So then, I don't know if we rally back up to it and keep on going, or if we rally back up to it and get rejected at the 200-day. So even then, we got to be careful. But as of right now, all we have is big old fat resistance that we are bumping up against. And resistance lines, all they are is just supply coming in. Every time the stock moves up to resistance, you get selling pressure. Stock moves up to resistance, selling pressure. Stock moves up, selling pressure. So this is what we're looking for. Next is retail. On this one, this one's iffy. I just don't have a whole lot to say about this one. I don't know where we're at. We got some consolidation looking like a crossover. I don't know. Retail could be okay, but if you take the analysis of all the other sectors into account, then I gotta have a bearish stance on retail as well. Maybe I'm wrong. This one looks okay, but I just don't have a whole lot of conviction in my analysis on that. Next is healthcare, the XLV. This one is the resistance line I'm looking at, support down here. This is a more constructive pattern than some of the oil ETFs and the S&P, in that we got this and then a move up, and you can see that while this support line is flat and the resistance line is downtrending, that shows that buyers keep on stepping up, and the amount of buying pressure it's going to take the next time if it comes down, the next time if and when it comes down, it's not going to take a whole lot of buying pressure to push this up through resistance. So this is a more constructive pattern than the others, but again, this is healthcare. This isn't exactly a growth sector, so when we see the most constructive patterns being in defensive sectors, we gotta have a bit more bearish view on the overall market. Next is the consumer staples. And again, it's looking exactly the same as healthcare. It's a defensive sector, but it does look constructive in that we've got this broke out of resistance there, but what I'm looking at is support here. And again, if it comes back down to somewhere around here, it's not going to take a whole lot of buying pressure to push it up through resistance. And even then, you can make the argument that we've got a higher low right here. So again, these defensive sectors are the ones with the nicest setups, which is worrisome, to say the least. Dividends, again, a defensive sector, same story. Okay, there's what I'm looking at, but you could also make some kind of argument this is resistance. I don't know, we just got a whole bunch of resistance up here. Again, kind of like retail, I don't have a whole lot to say on this, other than, maybe you could make the argument that we've got a higher low here than this low here. So maybe the dividends is something you could look at. It's got some momentum in its favor, as the stochastics are just crossing over. On balance volume is pretty strong, pretty solid. It's certainly not under distribution. It's been under accumulation this whole time. On balance volume is pretty steady. But again, really, has it done anything in the past month or so, 3 months, all the way back to February? We're just kind of in this kind of a box here. Let me do this. Okay, so maybe we got something like this going on, and if really it's just kind of halfway in between this trading range. It's got more downside risk than upside, so even this one I'm not too keen on the dividends spider ETF. Next is the financials, and just no, I don't like the banks. We got right up at resistance, maybe on a move back down to this support line. Maybe I'll be a buyer once it bounces from there, but right now I'm not really a buyer up here. Next